Hello and welcome to Business Today. I'm Abha Bakaya. Today we have a two-part special for you. It's the eve of the largest IPO ever to hit India. The 21,000 crore rupee LIC IPO opens tomorrow morning. Our panel of guests tell you whether you should invest in this IPO or not and what the future of the share can be. Later in the show, we bring you an interaction with the biggest foreign investor in the country, an exclusive with SoftBank India. But first, let's find out if you should invest in the LIC IPO or not. We're joined by Ajay Srivastava, CEO, Dimensions Consulting, and Shahina Mukaddam, market expert. Ajay, let's first talk about the issue size. After this being this extremely anticipated, hyped mega issue, they have, of course, taken note of current market conditions. Has that left the markets a little deflated?
I think we should be excited for the one reason. Of course, the IPO is exciting enough, but the fact that the risk of a huge IPO hitting the market, that's receded quite substantially, and that could have serious implications on the capital market. Now it is far more manageable because at 21,000 crore, you're really talking about $1.5 billion from abroad, $1.5 billion from India. India, 10,000-11,000 crore, not a big deal at all. But, the quantum going down so dramatically, I think it's a great positive because the risk for the capital market is off the table. And for the 100 companies trying to list in this country today, it's a big sigh of relief that we don't have a big problem on our hands. We could have a small problem on our hands, which is manageable, but we don't have a big problem now. So I think it's a great thing for the size to come down. And I think with $500 million, $1.5 billion, you are in a comfortable zone, the issue will go through.
So Ajay, who is expected to buy? Policyholders who are getting the steep discount, funds naturally, retail interest?
Abha, if you look at, say, global institutions, when they build a relationship with the country, some of the things they do is nothing to do with, it's not a big amount, not to do with the long-term fundamentals. They will subscribe to this because that's the way the system works, right? You need to subscribe to this issue to be quote-unquote in the good books, even if the economics doesn't dictate it. For Indian policyholders, it's a good flip. 60 rupees they get of the share, and quite a lot of them will sell it out as well once they get it in the market post-listing. So yes, I think people will subscribe. I think a lot of flipping will happen immediately after the listing. A lot of retail will book their profits in it because, at the end of the day, it's a PSU stock in a very competitive industry. So how much long-term punch you can take on this stock to give you returns. So I think a lot of retail participation, but I can see churn happening post-listing immediately, and a lot of them will book their profits.
All right, Shahina, let's get your view in then. What's your take on this big IPO?
I think it is an issue which investors should subscribe to because there are a couple of reasons actually. First being that the size is much smaller than what was earlier planned. And at this size, I think the subscription is likely to be pretty good if you see both from the retail as well as institutional. So while this could be, this could be followed with a follow-on issue a year later, I think there is value on the table for investors.
What do you like about the issue, Shahina? What's attractive to you about the LIC story?
I think if you see on valuation, that is the basic, so valuation, it is priced at a very reasonable valuation compared to some of its local peers. And it's just about one time, its embedded value, slightly higher than that. So valuation is attractive. Two is, I think, going forward, they would be a bit more liberal with their with their shareholders than what they've been in the past. So I think we could see a decent return for the investors going forward. Ratios, I think, are slightly better if you look at the long term compared to some of the local competitors. But otherwise, I think, the persistence ratio is pretty healthy, 60% plus. So that I think is something that holds good for LIC in the longer term and for its investors.
Ajay, what do you think of the price of the issue and, the kind of attention or the interest it's going to attract based around that and how viable it's looking?
This issue at the end of the day, it's the pricing. The P is in hundreds. It's not P's in 20s and 30s at the end of the day, given the profitability of LIC. So to that extent, that's why I said you got to have caution. But I'm 100% sure that everybody is going to ensure, whether it's Indian mutual funds, DIs, will ensure the fact that there'll be enough buying firepower the day of listing and next 10, 15 days after that to absorb liquidity. So I don't think it will bounce. Whether it bounces up, how much, that's the key question. I don't think they will let it sink. No matter what happens, this issue is going to go through pretty healthily in the first week, 10 days at least.
So that's just it, isn't it, Shaina? People are expected to also buy in from a short-term perspective. We're already seeing that bump in the grey market. So clearly there's a lot of listing action expected.
Yeah, I mean, see, grey market, yesterday it was 50, today it's 70. So I think the market is becoming a bit more positive. So I think that should be okay.
Do you really think, Shaina, the FPO will happen within, a reasonable time frame?
Well, I think there will be an FPO a year down the line. So I don't think that's that much of a either issue positive or negative. Because I think the government has tried to price it reasonable at this point in time, given that they don't want to take away too much of liquidity from the equity markets. So I believe that whatever pricing they do a year later or whenever they come up with the FPO, given the market conditions should be better, I think the pricing would be in the favor of current investors.
Foreign investors, Ajay, as you mentioned, a lot of them will support the issue. But in terms of looking at this as a longer-term play, do you feel there might be some interest even on that front from some of these funds?
I have not seen FIs buying Indian PSU stocks from time immemorial. Including in SBI, it's very limited. And then that's the best stock they bought is SBI at the end of the day. But if you look at whether it's a petroleum company, whether it's ONGC, they have not bought these shares in any significant amount. My guess is same applies to this one. Very small float, 3.5% float in the market. That itself is a problem for most funds if they want to buy and get out. Number two, there will be an overhang. Government said 1 year they will not sell. But year one later, come March of next year or April, they will come to the market to sell. So on the pure tick boxes of a global funds, mostly LIC will not take it. Now, we're not saying nobody can say it, but the fact is it doesn't work for them given the board of directors, governance structure, transparency, profit loss. You're talking of fundamental factors like valuation factors, but I'm talking of more the fact that with limited float, governance, board of directors, it just doesn't fly in most people's books at the point of time.
So Shaina, and I know you have a different view here, what kind of response are you anticipating then, whether it's from policyholders or retail or some of these institutions?
They have 27 crore policyholders, if I get that right, and of which almost I think more than 6 crore policyholders have linked up their demat accounts, which actually shows their intention to invest. So really speaking, retail investors are already in, I mean more or less. And institutionals, what I've been hearing is that they've got some very good lineup for anchor investors. So on both fronts, retail as well as institutional, I think there would be, I think it will go through pretty well.
All right, Ajay, Shaina, thanks so much for joining us. The mega IPO opens tomorrow. We'll be on top of that, and two very differing views coming in for you tonight.
Hello and a very warm welcome to Business Today Television. And with me today, one of the best guests to have on India's startup ecosystem, Manoj Kohli, the country head of SoftBank India and the chairman of the Future Business Group at CII, and someone who's actually laid the pipes for the digital revolution that we have seen. He's the one who set up mobile networks all across all Indian states as the in his leadership position as the CEO of Bharti Airtel, and not just India. I don't know how many of you know that he also went and did that all over Africa. Manoj, as always, a very warm welcome and wonderful to have you on the show today.
Thank you, Siddharth. I've missed meeting you for a long time.
Okay, so the reason we are talking today, and since it's Digital India and we are discussing what Manoj has been leading in terms of furthering India's startup revolution, It's only in the fitness of things that both of us are doing this digitally instead of old technology. So, let's start with this summit that you put in place for our startups, the next 1,000. And what came of this? Did we just evaluate and talk shop, or did we get some concrete stuff going for the next wave of innovation?
No, thank you, Siddharth. I think this is really a very big turning point in Indian economy. And we thought that when we have 95 unicorns in the country, it is better that we systematically plan for 1,000 by 2030. Because frankly, in this Amrit Kal event situation, we should plan much more long term. And this is a huge shift in industrial economy of India. And therefore, for the first time in the world, you'll be surprised, a global unicorn summit was organized. Objective was to nurture 1,000 unicorns. And let me define unicorns. Unicorns are those startups which have a value of 1 billion plus. And today we are 95. We are planning to go up to 1,000 plus by 2030. We also are number 3 in the world in startups after US and China. And our objective is to be number 1 in the world. Now, this summit was very successful because we had 21 sessions, 10 countries participated, 5 states of India participated. There were 22 unicorn founders who participated and 65 star speakers. Now, we did this because we feel that the impact, the positive impact of unicorns is fantastic. One, that majority of the investment now, if you notice in the last 2 years, 60 to 70% of investment in India is going into unicorns and startups. Which means that the GDP positive impact, if Indian GDP has to go up from 3 trillion to 5 trillion, then startup contribution will be huge to that GDP growth, incremental GDP growth. Secondly, the talent of India, especially from small towns and villages, is really becoming entrepreneurs. For example, we talked to Vikram Chopra, who came in one of the sessions. He's the Cars 24. He's from Raebareli. We talked to Dipinder of Zomato. He comes from Muktsar in Punjab. So many founders are from small towns, very well educated, very technology savvy, and very hungry to win. Win for themselves, win for their company, and of course, win for the country. The third impact we see is the technology impact. Today, we see massification of digital technology. If you see, for the first time, the rural consumer behavior has changed in the last 2 years, where rural consumer actually is doing financial transactions, payment systems, money transfer on mobile now, digitally, which never happened in the history because there was no trust. Today, there's a trust. There's a faith in digital technology, which is fantastic. And I think these entrepreneurs and unicorns are utilizing that situation to go deep into India's villages. The fourth aspect, Siddharth, is very important, that if you remember in Airtel, we had made a unique business model in the world. And that is why we could reduce the tariff of the telecom, mobile internet to lowest in the world. Same thing is happening here. These digital unicorns are coming up with very unique business models which are most affordable in the world, which actually makes them viable for a global business or global operations. And last but not the least, they're also building admired brands. If you see IPL, if you see cricket, if you see Olympics, 60 to 70% of ads are startup ads, startup brand ads, which is fantastic. That means that these startups and unicorns will build brands which are admired not only in India, but going global. And that is a dream of every Indian, that we should see our brand across many countries of the world. So these were the objectives behind this summit.
Manoj, let's also talk about the next wave of innovation. What's your own sense, since you have interacted with so many startups and you gave us some examples about how it's actually Bharat which is starting up in many ways. So far, the wave of innovation has been led by certain sectors, and I repeat, it's all because of the telecom backbone that you have in your previous outing done, and so many others, and that revolution also continues parallelly, silently, even if that is no longer considered as hot as startups. And the company that you worked for was also a startup at one point of time. So where's the next wave of innovation coming from? Which sectors, and what is going to drive that?
Let me tell you, the next wave of next 5 years, let's say by 25, 26, will be in areas of health tech. Health tech is one thing which India needs in a big, big way. And health tech includes clinics, online medicines, pharmacies, where Indian consumer has difficulties. So health tech will be one of the top 5. Another one will be, which has started already, but still long way to go, is ed tech. The massification of education, especially for small towns, villages, especially isolated villages. I remember in Airtel, I used to personally go to thousands and thousands of villages where there was no road, there was no water or power, but mobile was there, but now education has to reach. And that will reach only through digital technology. It can't reach physically because you can't get the best teachers in the country to go to a village and teach. It can only happen through, and by the way, those children deserve to have best teachers.
Absolutely.
Why not? Because they're very bright people. They're very bright kids. They're hungry to succeed.
Right.
The third aspect which I see is the area of robots and drones. Robotics and drones. Very big area. Because frankly, India has to be automated. India has to be digitized more and more to become a modern economy. And this will help. And there are already startups doing this. The next area is agri-tech. Agri-tech, because of India is a very large producer and we export so much. But our productivity is still low. And for productivity to go up, we have to mechanize and digitize our agri. And that is how these companies are helping, which earlier companies could not. And last but not the least, I feel defense industry will have a major catalyst through digitization, which includes space.
Okay.
Space and defense. So I'm saying these are the 5 areas which maybe in the last 5-10 years were not a big focus, but in the next 5 years will be a big focus.
Manoj, you have always been a people person, and I remember your days where not only did you set up the physical infrastructure, but also nurtured talent, which has then gone not just in that company, but all across really. From a people point of view, startups represent an absolutely exciting possibility. Earlier, access to capital was difficult. Now, access to capital is far higher. And as you answer that question about the people who are driving startups, I also want to ask you one point that perhaps has been thrown at you in the past. Is there a certain bias only towards the products, byproducts of elite institutions? Are investors giving enough opportunity to those who may not have been lucky enough or hardworking enough to get into elite institutions?
Okay, so let me tell you, this is a people movement. The young talent, and let me define it, millennial talent, which is average age of 27, educated, very hungry, very tech savvy, because tech savvy is very important. And let me tell you, I'm delighted when I go to small towns, I meet young boys and girls, 10 years, 15 years, 12 years, who want to get into AI, machine learning, become coders, you know, get into software development, programming, etc., which is fantastic. This is where India's strength is. And I feel that this millennial generation is very purpose-driven, which means that they don't want to work for a company which is only going for profits. They want to check the purpose. Is the purpose good for society? So they're very sensitive people. Now, this generation also is very freedom conscious, in the sense that they don't want to be bound by one office, the 9 to 5, 9 to all. They are on their own. They will contribute, they will actually do much better with that freedom. They don't want to be bound by the strict restrictions, but they finally do better than others. And finally, most importantly, I feel that these guys are very conscious of the respect. They want to work for corporations which respect people, which respect their good values, which respect their future learning, future aspirations. But most importantly, Siddharth, now the biggest trend is that young millennial talent doesn't want to become employees. They want to become entrepreneurs. Even if they are small or big, it doesn't matter. Or they want to work for entrepreneurial startups, companies very close to entrepreneurs. So I think this is a huge shift. And I think the shift is from few industries or few industrial houses to thousands and thousands of startups and unicorns.
Always a pleasure talking to you. I've really enjoyed this conversation and hope to see you sometime again as we discuss the next wave of innovation in India. Manoj Kohli, thank you very much.
Thank you, Siddharth.